Welcome everybody to Digital Asset News, or Dan for short. My name is Rob, and today we have DCA Live. And again, I am welcomed, and two of my good friends here came in to help me out. Ben from Another Cryptoverse and James from Invest Answers. Gents, thanks for coming by. I do appreciate it. Good friend, help me out.
Happy to be here.
Crypto. Fantastic. So first things first, let's get something out of the way. We're going to talk about, of course, the bear market, the macro events and things like that, but we have to distinguish what kind of investors are we, because we're different. And varying differences that we have, but what type of investor are you? Long-term trader or combination? And do you find yourself drifting outside of crypto for better returns? Because let's be honest, there's some things out there that look pretty attractive. Then we're going to talk about, give us the best and worst case scenario for crypto and traditional markets for the rest of this year in 2023. And then there's also these rumblings about this 10-year bear market I want to go over. Things that were said by Druckenmiller and also Soloway. Next to last, GDP is up. Fed rate hike potentially up to 100 basis points. Tell me why or why not. And then also, let's end with a positive note. What are the positives in crypto? And is it still an asymmetrical bet in the short term and long term? So first things first, I forgot to mention, if you haven't subscribed to Ben from the Cryptoverse or James at Invest Answers, there's a link in the description. Shows you exactly where to find them. Also, you can find James on Patreon, and Ben's got a banger of a website, app.indocryptoverse.com. Links in the description. So first things first, I'm going to start with James. What type of investor are you, James? Because I'm a kind of a long-term holder guy, but I think you might be have a little bit different. So explain to us how your investment strategies differ.
Okay, here's a good question, because I think it's appropriate you're asking this question, because sometimes people misunderstand. If I buy something, I say I buy something, but what happens after that is very important. So there are many different types of traders, but like your derivatives traders, your arbitrage traders, options traders, scalpers, day traders, directional traders, swing traders, investors that buy and hold stuff. I do it all depending on where we are in the market. So I'll give you an example of directional trading. Refers to strategies based on the investor's view of the future direction of something. For example, I believe EVs are going to be an important part of the future, so I invest heavily in Tesla. That's kind of my directional asymmetric bet, as it were. Then my background is kind of derivatives and options trading, which is where you trade assets which are a function of a price of something else, so you can get a much higher return, but there's also a lot more risk. I do a lot of options trading extensively. In fact, I rarely buy equities outright. It's always an options trade. Same thing for crypto in some cases too. Then scalping, scalping is kind of a high frequency version of day trading. So you just go in and just grab a couple $100, $500 out of a trade out of Bitcoin. I was doing this a lot during the summer with the high volatility. And then arbitrage is a huge part of my playbook as well. So I arbitrage between co-integrated assets. For example, it could be a Bitcoin proxy like Bitcoin and MicroStrategy. When one is too hot, sell that, buy the other, etc. Day trading, I don't do that anymore, but I do sometimes day trade options depending on the volatility that's out there. And then I have kind of on the investor side of the house, I have what I call a hodl bag and a trading bag. The hodl bag is stuff that I just sock away and keep. That includes stuff like real estate, apartment buildings, Bitcoin, things like Tesla, kind of like my safe egg future keeping. And then a big chunk of the portfolio is for trading, swinging between assets, for example, which would be pair trading, another example of trading. And that's where I are. But I really find myself drifting towards returns in wherever things are hot. So for example, I was never a fan of Meta, but I haven't traded it in 5 or 6 years. But I couldn't pass up the opportunity to grab some yesterday. So that's an example of kind of a short-term speculation as well. And you don't know what the market is going to give you. But the way it works right now, I do have this thesis that kind of the leading indicator was Bitcoin and the rest follows. Now we're seeing the equity market get smashed and it's generating generational buying opportunities right now, almost as good as the C19 crash we had back in March 2020.
Holy smokes. So how do you balance this risk that you have? Because it looks like you've got some long-term, you got your hodl bag, then you also have some pretty short-term riskier plays. So how do you balance that out?
It just depends. I have models that have allocations and they're weighted in terms of risk. And I focus heavily on like I do a lot of synthetic long sell puts to buy calls, and after a spike, I sell a call out of the money to take money off the table. But that's what I've been doing for decades, and that it's very risky. Please do not even try this if you haven't been trading options for 5 years. It's extremely risky if the trade turns against you. But if it doesn't, it's also extremely lucrative. So I just know my positions, know my weightings, and I allocate weightings as well. I've got predefined goals of where I want to be. And sometimes those plans go back, a year and they don't deviate. So it's very, very important as well, I think, as an investor, is to make a plan and stick with it unless the thesis changes. So that's like, for example, a simple example of that is I had a lot of ETH. I wanted to hedge my ETH with another play. That was Solana. And my goal since April 2021 was to equate my Solana and Ethereum bags. And I'm almost there. But it took a long time to get there.
So just to paraphrase, because this was the questions that we all had amongst ourselves, which was, I wonder if people know that James is not going to hold forever. He's not going to diamond hands every single thing that he buys. So for you that are watching behind the scenes, if you're new to James's channel or my channel or Ben's channel, just know that if James talks about something, it doesn't mean that you should go do it and you should go invest and hold it forever. James has been more of a trader. And of course, he's got different variations of those along the way from short term to long term. So just be aware, these are the things. If you want to learn more about what James was just talking about, he's got a Patreon. You can check that out and go from there. So that would lead me. So James, thanks for answering the question and setting the record straight so we can understand where things are going. That would lead me to Ben. So Ben, same type of question.
Well, I guess my strategy isn't nearly as complicated. I don't really think I'm that great at the shorter term plays like James is. And I've tried doing that stuff before, but I normally don't really do that well when I do it. So I've just sort of more so moved in the direction of longer term trends in the market. So for instance, like this year, just sort of saying cash is king for the entire year, even though we've had plenty of rallies, right? We've had plenty of counter trend rallies where the market rips back up to the upside. And if you were skilled at timing those types of things, then you can make a lot of money, right? And these are the types of trades that James often will pursue. For me, I just sort of try to figure out what is the overarching trend and try to ride that trend for as long as I can, until I think it's time to go back the other direction. So for instance, like in the last crypto bull market, it was buying in late 2018, 2019, and 2020, and then simply riding it up in late 2020 and early 2021, taking profits. A majority of the profits that I took in crypto this cycle were actually in early 2021, because that was when I felt like the market was the most overvalued with respect to where the fair value was. And then I was hoping to time the second top as well as I did the first one, but it was not the case. And I ended up not realizing it until a couple months or so after it occurred. And then I mostly exited a lot of my altcoin positions and a lot of risk assets back in the first quarter of this year. And for me, I just continue to think that risk assets will remain under pressure for a while, but it certainly can be difficult, seeing counter trend rallies and bear market rallies. But the way that I fight against that is by still having positions in risk assets. Like, I still own Bitcoin. I still, occasionally pick some up. I have limit orders set in case we fall. And this has happened, this has been going on for the entire year. Right. And that sort of helps deal with the emotions whenever it goes back up, right? Like you at least have some. Might not be as much as you ultimately want for the next, sustained bull market, but I don't think we're at that phase yet. But it does, just occasionally picking some up. And that's how I do it. I mean, I don't even focus on any other cryptocurrencies during a Bitcoin bear market. Typically, the time to focus on other cryptocurrencies is usually like, the year before the halving, right, for Bitcoin. So like if you think back to 2015, 2019, those were all really great accumulation years for the altcoin market. And you'll probably see something similar in in 2023. So I just sort of try to figure out what is the most likely trend for a certain period of time, try to ride that as long as I possibly can, and then slowly shift gears and plan for the reversal.
That makes sense. So I mean, before we go on, I'm going to ask you guys again real quick. So right now, what are you doing as far as like in the crypto market? Are we holding? Are we just sitting on cash? Are we doing anything with equities and traditional markets? Ben, I'm going to start with you, and then I'll go to James.
Yeah. So I've as I said the entire year, like cash is king this year. I don't think it's going to be king forever. Let me be clear. Yeah, I think it's good to have some positions in crypto and equities. I mean, certainly some equities are more undervalued than other ones, right? I mean, like even if the entire market eventually has to go lower, it doesn't mean that every equity is going to go lower. They all hit bottoms at various times. So I think the way that I'm playing it is just, I have a fairly healthy cash position, and I'm still trying to grow it because I think next year is going to be a good year to get more into the market. I am exposed to risk assets like crypto and equities, but not nearly as much as I was back in like 2019, 2020, and 2021. I don't anticipate getting the same type of exposure that I had back then. Probably not until next year, right? And then hopefully we'll just repeat the cycle and have another bull market in crypto, right? And like maybe late 2023, 2024, 2025, something like that. So that's more or less what I'm doing, right? Not really buying any altcoins this year. More so just focusing on trying to get Bitcoin, DCAing it occasionally. I do have limit orders set still. And yeah, that's my strategy.
Makes sense. So you're waiting. So it sounds like it's more like waiting. It's about just sitting on your hands, doing nothing, which is the hardest thing to do. I mean, especially for us. So I get it. So then James, it'd be the same thing right now. How are you playing this? Because you, again, are more, you have your short-term bag, you're more riskier. So how are you playing this in the crypto market and then of course in equities? I think you're more dabbling more in equities right now.
Yeah. So I said this, I think, a couple of times on DCA that I had basically bought all of my crypto positions during the summer doldrums. So getting in at the bottom and getting all I wanted. And then I've just been sitting on a little bit of cash and getting into equity positions lately. I haven't bought or sold any crypto and I don't know, I can't remember in a while, but I kind of have what I wanted. And now I can make kind of much higher returns kind of on riskier options plays on equities, especially trading the ARB out of certain equities and Bitcoin proxies. I like very well. So I like to balance between kind of the equity side of the house stock market and what's going on in the crypto world. In addition to that, I do swap between Ethereum and Solana when the time is right. When one is overheated, right now we have, for example, month to date, I think Ethereum's up 18%, Solana's flat. So there'll come a time when, okay, Ethereum's going to run out of steam, then I swap into Solana and that'll run. And that's just what they've been doing for a year and a half now. You just got to time it right.
Yeah, well, that almost sounds. I mean, Ben said it. You said it. It's the same thing. Stick into them until they run out of steam, and then out you go. Okay. And then for me, I think we've said this pretty much the whole time on the DCA show. So Ben's not buying much of any crypto right now, just kind of waiting, sitting on cash. James is more into the trader side. He's going to look more short-term types of things and getting away from crypto for a bit. And then me, myself, and I'm getting. I'm sitting on cash, but I'm also DCAing, like I've talked about before. I am still getting Bitcoin. That's it. Just okay. So, well, that makes sense. So, like for me, like Ben and me, I always listen to, these two guys, but when I always hear Ben say, "Take a cold shower" when I'm buying my alts, which goes off without a hitch every single day as I'm buying alts off of Coinbase, because I'm not DCAing like I used to, heavy amounts. It's just kind of getting into it a little bit. And just when we had that rally, so what I do is, let's be honest, all of us, we're not diamond hands people. We're going to sell at some point. I am not a diamond hands person. So when we had a rally the last 2 days, I tweeted out, take some profits. Nobody ever went broke taking profits, especially if you are hard up for cash. And I did that myself and it worked out pretty well. So as time goes on, I'm going to keep DCAing. I buy a little bit here, just take the time, and then as time goes on, I get into and sell the crypto. And of course, for us, it's more of the real estate right now. We're back in Puerto Rico, so getting back into the long-term, short-term rentals, actually more long-term rentals. So that takes care of the very first question. Hopefully, this one's a little bit quicker. So the next one, the scenarios these days. I mean, can it get any more negative out there? I don't know what the fear and greed index. I'm going to say probably maybe inching up after this little rally, but it's probably still around the 24, 25, 26 area, I'm guessing. But give us the best and worst case scenario for crypto, even if you want to throw in there traditional markets, because I think they're a little bit correlated, although Bitcoin and crypto has been less volatile than traditional equities, which is actually good to see. So give us your best and worst case scenario. Ben, I'm going to start with you, because Ben did this video, the United States heading into a recession, and it goes over a lot of different data points. And James also did something similar on his channel. So Ben, when you talked about these things, I mean, you went over, the effective federal funds rates, inflation year over year, the unemployment rate, the treasury yield curve, which scares the hell out of me, and then treasury yield spreads. And then also you took a look at, there was a video, this part here, where you took a look at the inflation rate as it rises above, or the yields of the rates as they rise above the inflation rates. That scared me. So real quick, that's like the worst case, but tell us both the best and worst case, I should say.
Yeah, it's a good question. So I think the best case, I'll start with the best case, right?
Thank
so
you.
Start with the optimistic view. I guess the best case would be crypto as a whole goes sideways for a year and then starts going back up. I think that would be like the best case scenario. And when I say sideways, I don't mean like it's not gonna bounce occasionally. Like I guess best case would be Bitcoin bounces back up for a while. Maybe it goes back to 25K and then, comes back down to 20K. And we just sort of do that until late 2023. And then we start trending back up into the next, Bitcoin halving. And bringing that video that I showed into the mix, like how could we possibly have a best case scenario where everything looks so negative? I suppose the only way that could happen is if inflation somehow comes down quickly and, like the economy, despite everyone's expectations, right? Like the economy remains relatively strong and the unemployment rate never goes back up. And there's just a lot of false signals on these indicators, right? And nothing actually manifests itself. Another way that it can manifest is that if the Fed just decides a year from now, if inflation is still sticky, maybe they just decide we're going to live with it rather than fight it anymore, and they print another $5 trillion or something, right? Like these are scenarios where I could imagine the best case scenario would just be that it goes sideways for a while, like it normally does in the year after a bear market. If you think back to like 2015, 2019, 2019 was a little bit more volatile than 2015, but for the most part, if you could look at where it was at the beginning of the year and then the end of the year, it was mostly just sideways for both of those years. So I guess that would be the best case scenario. We just sort of go sideways for about a year, within some range, and then we slowly go back up into the next halving out in 2024. And then, the worst case scenario is that, is the idea that Bitcoin and crypto as a whole has never actually experienced a full-fledged recession. Again, it was born out of the financial crisis in 2008, 2009. And we only very briefly got a glimpse of what crypto does during a recession during March of 2020. And it wasn't the best thing, right? The only reason we came out of it so quickly is because the Fed printed trillions of dollars. Right. I think the worst case scenario is that, we still have more pain ahead. But it's funny because we could have more pain ahead and it wouldn't really even be that dissimilar from what we've seen in prior bear markets in terms of percentage drawdown from the all-time high and the length of the bear market normally lasting about a year. If you think back to the 2013 bull market, we had a bear market that started in November of 2013 and it lasted until January of 2015. And that was also a double peak cycle. It just the second peak was a lot higher than the first peak, unlike this one. So yeah, I think the worst case scenario is we have to go put in yet another lower low, and then maybe we trend sideways for a while, right? Until we get to the next the next period of expansion. But I think I think it would make sense for investors not to blindly think that either of these scenarios have to happen, but to be prepared for for either one. I mean, for me, just to provide some perspective, I mean, I have some crypto right now. Like I'm mostly Bitcoin. If a year from now, the crypto market is still just sort of in this range, right? Then I could easily see myself getting into the altcoin market. Even less than a year, right? Not even waiting that long. Because I think they would, go into another period of expansion during the next bull market. If on the other hand, we see some type of capitulation or something in the next few months, more in line with a typical scenario or the worst case scenario or something, then I could see myself getting more aggressive in the altcoin market sooner rather than later. So that's more or less where I stand. I mean, again, to sort of summarize, worst or best case scenario is I think we would just kind of go sideways for the next year, within some range. Worst case scenario is we have more lows ahead of us, and that we really see how crypto performs in a full-fledged recession.
We never gone through it, so this will be interesting to see how we do. And I will just say this before I get to James, is that I mean, the best case scenario is we chop sideways for a year. I mean, for me, as just dollar cost averaging, that's like a godsend. And I gotta say, I hope that actually happens, but who knows? It's a little bit shaky out there. So that's why I lean on James to help me out. So James, best and worst case scenario, what do you got, buddy?
Well, first of all, we did speak about October, and so far, Bitcoin is up 8% so far. ETH is up 18%. As I mentioned, Solana's flat. I think Cardano's down for the month so far, and other names. They're all over the place. It's all mixed. But I do believe that it's as if Bitcoin can sniff out markets. It can sniff out inflation. It can sniff out a whole bunch of stuff. And I believe it's the first mover, and other markets follow. So Bitcoin bottomed first, June 16th, or whenever it was during the summer. Pretty clear there was a bottom. Now we are 90% sure when you look at all the people who were ultra bearish out there. All of a sudden this week, they're flipping to being, okay, no more dreams of 12K, no more dreams of 10K, no more dreams of $3,500 Bitcoin. It's going to 25,000 straight away. So it's just funny to see the narrative change. Also, looking at some of the on-chain stuff, there's been a huge spike in greater than 10,000 Bitcoin holders, which is positive to see. Speaking of the other side of the fence, S&P 500 is up 11% off the bottom 10 days ago.
Yeah.
And it's down 14% over the last 12 months, which is a fascinating number because that 14% is the average amount of money printing that happens for fiat every year. And it's also the average stock market return. It's also what your currency debases at. Everything hovers around that 14%. Very important number. So the fact that the stock market of the last 12 months is down 14% gives me the hope that it's going to go up. I know hope is not a strategy, but historically, there's a lot of money in the sidelines. It has to be activated and put in there. So the question is, I think, what can we hope for? If we look at, say, the markets. So you mentioned something like Druckenmiller and then Soloway saying, hey, markets are going to be flat for the next 10 years. Technically, that's possible, but let me explain why it's not going to happen. First of all, we've seen the dead decade out of Japan, the Nikkei, which is now 30 years, but that's due to chronic issues like no raw materials, bad monetary policy, a huge bubble, etc. That's a separate kettle of fish. So don't point to that as an analog. The other thing is, yes, you could argue that 40 to 60% of the companies within the S&P 500 are zombies, but they will be replaced. The average lifespan of a company in the S&P 500 is about 15 years, not 14, unfortunately. But the reason I believe the stock market will continue to go up is because inflation goes up. The government talks about 2% inflation. The truth is, inflation is never below 5% over the last 30 years. It's between 5 and 12% per year. And as an investor, your asset prices get to ride upward with inflation. We'll talk more about GDP later and how inflation is impacting GDP to give people this weird number that came out as well. Then you've got the QE to infinity. Money printing has to happen forever. US government has 170 trillion in unfunded liabilities. It's just stupid to think they can't not print forever. They will. That's the whole QE to infinity thing. Also, companies grow And especially in an inflationary environment, they're selling more at higher prices, therefore more profit, therefore QED. Prices go up. Technology is also making things more efficient, more effective to deliver, which ultimately could drive deflation. But in the meantime, it'll drive the stock market up. And then the Darwinism aspect of the S&P 500. I think if you go back to the year 2000, the top 5 companies in the S&P 500, let me guess, GE, Exxon, Pfizer, Citigroup, Cisco.
Yeah.
Today, they're Apple, Microsoft, Amazon, Alphabet, Tesla. It all changes that. It's radical. Where are those companies now? So anyway, not that they've gone away, but they've definitely shrunk a lot compared to the disruptive technology, which is what I invest exclusively in as well.
Right.
So that's kind of where I think we're going up. I think minimum we'll see 4,100 on the S&P 500. We've seen it shoot up 11% in 10 days. We know this thing can move. It's up what, let me pull out the charts. S&P today, 2.1%. 82 points. It's only at 3,900. 4,100 is a 200-day moving average, and I think we'll definitely get above that before the end of the year.
Got it. Well said. And then going back to what you talked about is those zombie companies. They get eliminated. So just like we had talked about this before, and you talk about this a lot, and you talk about the cash flow has to go somewhere. The money has to flow into something. So as those companies, they die, which they should have died already, but thank God for quantitative easing and things like that, they're able to stay afloat. Once they figured out those aren't going to work, it has to go into somewhere. And I think that is also the same thing that it got me interested in what Druckenmiller was talking about, and also what Soloway talks about. And I know people will say, these guys, what do they know? But I mean, Druckenmiller's been around for a while. He knows a couple of things, thing or two. And then Soloway was right about Bitcoin price, even though he can't be right forever. But the thing that they talk about is this 10-year time frame. And I don't know if we're right, James is right, where things are going to go up, or Ben's right, where it's going to go totally down. But if we meet in the middle and we go sideways, I'm okay with that. But one thing I will make mention is of this. The things that Druckenmiller was talking about, he talks about this forgotten era, the 60s to late 70s, when the S&P just was just a downward decline. You can see it right here. However, we peaked up here. It took a long time for it to hit its all-time high again. But even though it took a long time, there's still a bull market in a little bit of a piece. So even though we're here and we come down to the 556, there's still about a year or so where it went up. And then of course it crashed again, but it went up again. And I guess that's the bigger thing about what we talk about, which is taking those profits, investing and running into those things that actually, until they run out of steam, then get out of them. I think even if it's the worst case scenario that I can think of, and James kind of dispelled it with Japan, but to go with that route for that long, there's still going to be many bull runs there. So there's still money made, and that's it.
Exactly. That's why, choppiness is where a lot of action is made. There's one other thing too. It's kind of something I've been thinking about a lot, is if the US dollar loses dollar hegemony and
right.
petrodollar goes away, stocks go up because the dollar debases at a faster rate. So that's another angle there to think about. So it's
that's a good. How's the Dixie doing today?
Because
I know there was quite a decline.
It's up 0.25% today.
Yeah, it's 110.8.
Hey, speaking of percentages, let's talk about this. So the GDP went up. Not what I don't think that was what everybody was expecting. And we would like to see, the Fed would like to see economic slowdown, correct? And that would be good for them. Then maybe they could pivot some year before they start quantitative easing again. So the question is this: GDP is up. Will we see a Fed rate hike of 75 or 100 basis points? Ben, I'll start with you.
I think it's going to be 75 basis points. I don't think they're going to go with 100. I do think that, a lot of investors are prematurely calling for a Fed pivot. And all things considered, according to crypto Twitter or FinTwit, we've had 4 pivots this year if you listen to what people say on Twitter. But the truth is we've had 3 75 basis point rate hikes so far. Again, it was only a few months ago when a lot of people said there was no way we were going to go above certain levels, and here we are knocking on the door of another 75 basis point rate hike, which I think is what they are going to do. I don't think it's going to be 100. There's not even really if you look at markets, they're sort of pricing in, I think, like an 80 to 85% chance it'll be 75 basis points, and then maybe like a 15% chance it'll be actually 50 basis points. So I'd argue the discussion is probably more so between if it's going to be 50 or 75, not if it's going to be 75 or 100 at this point. I think what's more important is what terminology or what type of tone does Powell give in his talk. I mean, because I do think it's going to be 75, and after they come out and say it's going to be a 75 basis point rate hike, which again I think is the most likely scenario. A lot of people are going to be curious, well, what comes next, right? What's going to happen in December? Is it going to be a 50 basis point rate hike in December? Is it going to be another 75 basis point rate hike in December? And if they give any type of inclination that it could be a lower rate hike at the next meeting, then you could see, I think you could easily see the S&P, continue to move higher up to maybe its 200-day SMA. However, no matter what happens at the meeting, I mean, again, I think the implications at the meeting will affect short-term price action, right? Like, so again, if they're dovish, you can see it go higher. If they come out and if Powell gives the same speech he gave at Jackson Hole, gives the same speech he gave in September, which also occurred during bear market rallies, right? Like, he can knock the market right back down. He's done it multiple times in the past by giving these very hawkish speeches, and he reserves the right to do it again. But I do think no matter what they do, whether we continue the rally or not, I still think there will be pain in risk assets in 2023, mainly because we haven't actually felt the full effects of a theoretical recession. Okay, because we did have 2 consecutive quarters of negative GDP, but if you only go by that definition, you would have to now say we're no longer in a recession because, as you said, right, we just had a positive quarter. I don't think 2 consecutive quarters of negative GDP is sufficient to declare a recession. I think you have to look at a number of factors, including the inversion of the 3-month and the 10-year yield, which we finally just got. And if you look at that, once that inverts, which just occurred over the last week or so, you normally see a recession occur within about a year. Okay, it could come a little bit earlier than that, could come a little bit later than that. But that's normally when the S&P bottoms, is sometime during that recession. So, my opinion is that no matter what they do at the next meeting, whether it's 75 basis points or 50, that there will be some, of course, effects in the short term. I still think medium-term time frame, like over the next 6 to 12 months, you so likely will have some pain in the stock market. I think we'll for sure see at least retesting the lows, if not going lower, sometime in 2023. And again, if you were to show, I don't know if you have the chart pulled up, but I showed a chart on that video where we look at all the prior bear markets during periods where, when we had high inflation and whatnot. And a lot of the bear markets last a couple of years, right? Like, they don't just last 1 year and that's it. A lot of times they can last 2 years. So to go back to what you said earlier, people calling for a 10-year bear market, I don't think asset prices are going to go down for 10 years straight. I could see equities going down for a couple years and then slowly going higher from there. I also think it's kind of irrelevant for an investor to measure everything from like a irrational all-time high. What's more important is just DCAing into the market when it seems like a relatively attractive time to move in. And then, by the time you're at the all-time high again, you're potentially up 50% or 2x, depending on how bad it gets. It doesn't really matter what that all-time high was. It's all relative to, ultimately to where you get into the market. So yeah, probably going to be 75 basis points. Their terminology will affect short-term price action. No matter what they say, I still think we're going to have some pain in 2023 in equities.
Gotcha. Makes sense. But you know what? I mean, just what you said, this would really play into James's play, which is, he likes volatility. So James, is this actually a good thing that we're going to see this? I mean, because it always is like people expect it and then it happens and the market reacts. And then I see people say that's irrelevant, and it is irrelevant, but then it bounces right back. But isn't that good for someone like yourself who wants to trade and make some swing trades?
Yeah, in fact, one of the things that's been very disappointing is the flat lack of volatility in Bitcoin, because it was a lot of fun.
Yeah. Well, for me too. Yeah.
But first of all, your first question regarding the GDP.
Yes,
it was a surprise, but once again, it shows you how flawed the metrics are. And you heard me rant about employment numbers, I think last time we were on together, and how badly they're measured. But when we analyze macro, we look at all the stuff we look at here: real estate, shipping volume, shipping rates, consumer confidence, on and on and on. Go out to a restaurant, look around. I drove by one yesterday. It's normally packed, dead, nobody in there at all. Look at real estate. 4 months ago, near me, a house sold within 4 days. Today, 30 days, 0 bids, nothing is selling. Look at Amazon. Warning: Amazon is where people shop. They are terrified, and Jeff Bezos has been talking about this. Has been screaming for months about it, saying, "No, everybody, we're in a recession here." Elon Musk, the 2 best capital allocators on earth, have been banging the alarm bells. So the reason for the rise in GDP, don't get too excited. Obviously, third quarter, I think it reflected a net increase in exports, which matched expectations that trade deficit had narrowed, and everybody's excited about that too, as a result of a steep drop in imports. Again, everything is grinding to a halt. And that's also can be seen by the bloated inventory levels at many retailers. Now, the GDP numbers are beating consensus by that whopping 0.3% because GDP gains come because of inflation. Technically, you could assume, okay, GDP growth, 2.6% minus inflation, 8% equals minus 5.4%. It's very crude, but it actually works. And this is my frustration. You've got all these, Fed people, etc. They're riding a motorbike at 200 kilometers an hour with their head turned around looking backwards. And it's terrifying. Now, on the good news regarding kind of pivot news, I always said that who works for who? I think the Fed works for Larry Fink, the head of BlackRock, and BlackRock leaked to their private investors saying the next Fed meeting will include pivot language, probably the 70 to 75 basis points, but that's what they're saying. The Fed have clearly destroyed demand, and net, there's zero chance of that 100 basis points you mentioned. It's probably going to be 75, but the probability of a 50 basis point hike last week was 6%. Yesterday it was 13.5%. Today it's 15%. So it's creeping up. I still think it's going to be 75 basis points. And then, again, as I say as well, it takes 6 months to see the damage of this hike and the other hike before it. So they've already smashed everything asunder, and this is where we are. And that's why Larry Fink is on the phone to JP and say, dude, come on now. Put the brakes on. So we'll find out if that's true next week.
Come on, you're killing us. I think all those things potentially true. But the one thing that worries me is that I see there was a report by Bloomberg. We talked about this last week about the savings. Just American households, and the savings went from, billions or an astronomical amount because of all the stimmy checks. And now it's like 10% of what it used to be. So I think people are still spending, but they're grinding it down to where the savings isn't there. And then when that stops, everything stops.
Check out credit card debt. That is an absolutely terrifying story. I had 2 credit card statements. I looked at them side by side. 2 of them I have no balances on and I don't use. One said 29.99%. The other one said 34.99%.
No kidding.
Imagine, and these are one of them is Bank of America and the other one is some store credit card. But just imagine if you're holding a balance at 35%. And I know there are people out there that are stuck and they're still spending. They're putting it on their credit card. And once the unemployment numbers hit, wow, that's when the real concern will be out there for everybody. So be careful. Don't hold those credit. Watch those interest numbers on your credit card statements. That shocked me.
Yeah, that's a good point. And then the question I have, you just brought up unemployment, and Ben, we all talk about this, but Ben brought it up to light in that last video where the unemployment rates hasn't gone through the roof. I think we've actually gone down. Well, I'm gonna say we're at 3.2. So what's it gonna take? 3.5. Thank you. What's it gonna take for? This was 3 weeks ago. I don't know what it's the same, but there was 10.2 million job openings and 5.8 million workers. So what are you going to do? And how do you raise GDP? And I think it goes back to James's point. These zombie companies, they need to go away, because if they can go away, then that frees up a lot of capital, which is the labor force. But we'll see how it goes. All right, let's get into this last one. We talked a lot about the negatives. I know it sucks to hear it, but it is reality. I hate to say that, but there are positives out there. So the question that I have is this: what are the positives in crypto? Is it still an asymmetrical bet in the short term or long term? And then everybody right now, if you could do me a favor, if you have questions for me, James, or Ben, start to write those in the chat so I can pull those up as we get done. So Ben, I'm going to start with you. What's the positives in crypto, if anything, that you can find?
Yeah, I mean, I think long term it's still a fairly good play. I mean, it sucks in a bear market, you know, because it always seems like it'll never go up, and all the rallies are sold off, and you kind of become numb to the price action. Probably the people that joined in 2021 now fully understand why, you know, why people become so numb to price action after being in crypto for a few years. But yeah, I do think it's still a relatively good long-term play, but it actually it's a little bit more nuanced than that. You have to make sure you're picking good projects, right? You don't want to be the person that was relatively early to crypto, but you didn't make anything because you threw it all into some like random coin that was shilled on Reddit that really didn't have any great fundamentals. So that's why I always say, like, if you're new to crypto, you start with Bitcoin and Ethereum, right? Like, you start there, and then you can expand to, you know, to other cryptocurrencies. But in my opinion, at least you should start with those two blue chips, right? I think those are the blue chips of crypto. I think you start with those. As long as you have a position in those, I think that, you know, if crypto were to go back up, which I do think it will, those two will almost assuredly be part of that bull run. Whereas, you know, if you were to go pick out random 5 coins out of the top 1,000, there's a good chance those 5 coins will not join in on a future bull run. So I think the long-term asymmetrical bet still stands as long as you're putting your money into projects that are likely going to stand the test of time and actually have relatively good utility. One thing to consider is that, considering that cash, the access to cheap capital is no longer there anymore, right? The Fed is raising rates. It's becoming more and more difficult for people. I think we are probably going to slowly transition from projects pumping based on pure speculation to actually needing some level of utility. Okay, because the market, as you guys just pointed out, both you and, you know, James and Rob, as you guys both just pointed out, I mean, if the zombie companies have to die, but that's not only in equities, right? That's also in crypto as well. And once those zombie companies are gone, the ones that really don't provide any value, it can leave more room for these other ones to expand. So I do think the long-term bet is still there. I think for the altcoin market, the long-term play is most likely going to occur in 2023. That's not to say you're not going to find any good deals in 2022. There's always a few altcoins that bottom, you know, earlier than others. But yeah, I think the long-term play is still there. And I think a lot of people, I mean, I honestly think you have until 2024 to really figure out what you want in your portfolio. Because until then, we're still going to be, I mean, even if we get pumps and whatnot, we're still facing macro headwinds for a while. By the time we get out to 2024, perhaps inflation will come back down. QT is you know, potentially over. Maybe we'll be going back to QE, and then we can expand again. So I think the bet's still there. Just going to take some time to pan out.
Solid play. All right. So James would be the same thing. But then before we talk about that, when we were talking about the L1 chain video that you did, I was talking about this one. So if, like, just what Ben talked about, find the good projects that are out there. James did a couple of different ones about the top L1 chains. I don't know if this is the most recent. This was streamed a month ago and 5 months ago. Did you do another one that I watched?
I don't remember.
Because you do so many.
Yeah, it depends on when the data changes or shifts dramatically. But yeah, the most recent one was really focusing on the Nakamoto coefficient as a measure of decentralization. It's probably, it feels like 2 or 3 weeks ago I did it.
Yeah, because that's the one I was talking about. So I'll find it and link in the description. But it was a great one just to talk about what's decentralized and what has a better chances of moving forward. But yeah, Bitcoin, Ethereum, the blue chips. James, what do you got as far as the positivity?
Yeah, and to echo what Ben said, and thank you, Rob, as well, for mentioning that video. You know, we talk about zombie companies. I say 40 to 60% of the S&P 500 will not be around in 10 years, or if they will, they will not be in the S&P 500. That's for certain. Right. And then crypto, it's more like 98%. So just on a relative scale. So be very careful out there. And people are still throwing money into things that are clearly not going to make it. So that's the sad thing. Now, back to your question, the positives that I take out of crypto. Like Bitcoin for me was a fascination in 2017 because of its finite supply. And I was always well aware of money printing, etc. It's like, this thing is so hard. There's so little of it. And if this crypto stuff takes off, wow, everybody needs to have a little piece of this insurance. And that was nearly 6 years ago. It's kind of crazy to think 5 years ago. But the gambit here is a function of two things. One, adoption, and second, regulation, or the other way around. I don't know if it's chicken or egg, whichever one comes first. We're getting close. We're seeing some big advances. I think we might get some new people elected into the US office that might be able to push some new regs through in 2023. That could be a game changer. Again, I mentioned as well earlier, I think a huge spike in the 10,000 plus Bitcoin wallets. So big money knows something is up. And that's been extremely positive over the last 3 or 4 months. There is one of the other things that I'm fascinated is not just Bitcoin because of its hardness and its store of value narrative, but we have this advertising organization now marketing Bitcoin for us called the WEF. And every time they come up and start talking CBDCs, I mean, you don't even have to mention Bitcoin. I mean, people should just get the message. This is just terrifying what they have planned. And they say it openly. I tweeted something the other day with our friend, not Klaus, but the other guy from South America. You listen to his words, that would give anybody nightmares for the next 12 months. So we have that CBDC hedge narrative, which is huge. Second thing I'm fascinated about is, I always want to play where the puck is going to be, kind of like the directional trade of Tesla and EVs. Same thing as for TradFi disruption, traditional finance. I had an issue this week. People had to actually mail me a physical check because it was above $3,000 amount, and it couldn't be done using any of the other combination of methods to move money. And it's infuriating that the on-ramps, the on-rails, the TradFi rails cap amounts that you can't even use, no matter what you try. And it was just so frustrating. If they had a crypto wallet, I could just go, boop, done in a second. So that's why I believe heavily in layer ones. I think they are going to revolutionize the TradFi world, which is a criminal enterprise. Charging 30% on a credit card and giving you 0.01% on your cash in your account in the bank is just, people have to wake up to that. And the final positive takeaway, I think, is, again, people are stacking. The dispersion of Bitcoin is getting better. It's up so far in October, which is good. I do expect us to have a strong run into the end of the year as we go forward. So hang tight, everybody. And I do expect as well, it's already going to kick in, because when you have the ultra bears pivoting to being ultra bullish, that's going to create this huge FOMO wave coming in. So.
Well, let's hope. Well, man, I gotta tell you, I hope you're right. I'm on that one. But I mean, it's the same thing. Like we see everybody just go in one direction. That's why how many $1.5 billion in shorts were just liquidated a couple of days ago, because everybody's like, it's going down, it's going down. And that's why I don't play that game. That sounds like the most dangerous game you can possibly play. And then speaking of like checks, I had to write a check a week ago for that charity event that we do for the El Paso Boys and Girls Club. And I'm like, how can I pay you guys? And they're like, oh, a check. I'm like, you guys say anything else? Like, no, check. I messed up the check because I hadn't written one in so long. I'm like, I totally messed that up. So last thing I want to bring up is that it's a good thing that we have the internet these days to talk about CBDCs, because in all honesty, I mean, if we didn't have people talking about it, everybody would just accept it. Like, oh, this is just a thing. Oh, you just turned me off. Well, that sucks. Well, who do I have to complain to? The government? Well, who's going to take care of that? So CBDCs, I think I need to cover more. That is for sure. And then the last thing is, I forgot to say this, is, James, with you talking about all the capital trying to find its home. If you were an investor, I don't know, BlackRock, a Mass Mutual, NYDIG, and you're like, well, if there is a 10-year downturn, like what Druckenmiller is talking about, do I want to put my money here, but there's not much of an upside? Or maybe, just maybe, I want to do like 2, 3, 5%. We'll just say 2% of assets under management and get into crypto, because right now it's under $1 trillion. I mean, to me, when I look at this and I'm like, do you want to go through 10 years of that if you're a traditional player? Or do you want to say, maybe we should allocate? Maybe that's why we hear so many of the good news. Anyhow, just the thought, random thoughts. All right, everybody. So now we'll get into Q&A. I want to thank everybody for doing exactly what I asked them to do, which was ask the questions so we can get this thing rolling, because we're coming up at 49 minutes. So let's start here. First of all, it's just a comment. That's true. There are many help wanted signs everywhere. There's so many people out of the labor market. There's a place here in Puerto Rico called Bottles. They shut down Sundays and Mondays because they said we would like to be open, but we don't have any staff. Sorry, and there it goes. Here's the next question. Question for you all: if Bitcoin goes to 3K next year, man, I hope so. Would that mean that something in crypto is broken? And the big ones, MicroStrategy, well, Michael Saylor, did they make the wrong choice? What would make you sell almost all Bitcoin and move on? That's a pretty good question. Who wants to take this one? Ben, James, go right for it.
Yeah, I always said, so my cost basis for Bitcoin is always around that 9K. If it falls below 9K, I'm out. Done. Bye-bye. So it could wick down there on a black swan event, very possible, and I'll take that into account at the time. But if it starts to lose its momentum, especially with the big players, if I start to see, one of the things I like to look at is what the big money is doing and where they're moving their pieces around the board. Are they accumulating or are they dumping on retail? If I see the dumping on retail, I'm out. So
yeah, makes sense. Ben, what do you got?
No, I mean, I don't think there's much that could happen that would make me sell my Bitcoin. I mean, I've weathered the storm, multiple bear markets in the past, and Bitcoin has always proven its resilience in future bull markets. I don't think it's going to go to 3K. Let me be clear, but that's not the question, right? The question is if it goes to 3K, not whether I think it will. If it were to go to 3K, no, I mean, I wouldn't sell. I would probably then use all that cash I've been stacking and YOLO in, honestly, because I don't think my long-term conviction in it isn't going to change. I mean, it's a product of monetary policy at the time to some degree. So, I mean, if the Fed wants to keep monetary policy restrictive for longer than normal, and then we see some type of crazy black swan event that no one can really predict, it's not gonna change my opinion on Bitcoin. I mean, I think Bitcoin is going to be a big part of the future. It just sucks going through the bear market. So I won't change my mind on it.
Gotcha.
Exactly. And just to clarify, so I don't alarm the audience as well, there's not a snowball's chance in hell of it going to 3K. I don't believe, not with the adoption that we have and everything else that's happening. I was just talking about if, theoretical. I'm on Ben's page, hardcore. But everybody should also reanalyze their thesis. And maybe there's faster horses out there, as I always say, too.
See that, and that's just it. I'm going to go between both of you. I'm going to say that I would sell, but it would have to be a specific event. Let's just say, for example, that there's a double spend event, and for some reason it just happens. The code is broken or something. Let's say God forbid us, Craig Wright comes back and said, yeah, that bomb that I put in Bitcoin, it caused it to just melt down or something just ridiculously crazy. If it starts to fall like that and it goes below, I'm like, well, it doesn't work as much as it said. But beyond something crazy like that, I would probably just keep buying. And then we talk about dynamic DCAing, so that was what it would be. And the next one, question for James. With concern on the impact of the economy and of aging population, which is true. We have a baby boomer population that is aging rapidly and getting out of the workforce, which means even less of the labor force itself. Would the Tesla robots help solve that? I don't know what these. I've heard there's some Tesla robots and they're supposed to be rolled out. I have no idea.
Yeah, we're going to be a while away from having bots doing things, but the robots are already doing a lot of things. If you look at a fly through of a Tesla factory and look at how cars are painted, how bodies are made and welded together, it's all robots. So that age is already here. I am very, very concerned about the negative birth rate in different parts of the world. You can point to so many different analogs, and you know already that places like China are in severe, severe troubles. They have too many old people that are not being supported by enough young people. Right. And the old people are living forever. 100, 110 is not uncommon over there. And the birth rate is just too negative. So can robots help solve that? I think if we do get to a stage of, delivering robots, it will cause a huge increase in productivity of the human race, which means we'd be in a position to have a more abundant life. That's the positive. But the question is, where would that abundance go? And it normally goes to the top 0.1%, which is, it doesn't trickle down as perfectly. So
No,
I don't know. It's a tricky question, but we need young people, lots of them, lots of young workers to support aging populations like myself.
Most of us have been. Yeah, but I mean, look, if you go down that route, you have to look at UBI, universal basic income, because how are you going to do anything? How are you going to get above that? It's just almost impossible. So
and UBI already exists. It's already there in many different covered forms. So
yeah, that's true. It's also in California. I think they were testing it out, as a matter of fact. All right, then. So what else we got here? Oh, this one. It's a comment, but it's a question. I think you may be putting too much faith in the Fed and their words. They lie like all politicians. I mean, let's be honest. I mean, the Fed is, like I say, as federal as Federal Express. However, who appoints the chair? Well, it is Congress, is the president of Congress. So they are beholden. Follow the data. They don't care about entrenched inflation. They created it. Here's my question for you guys. Do you think there's some type of political slant that's what Jerome Powell is doing? And Ben, let me start. Let you start.
That's a loaded question, right?
It is a loaded. That's why I love this show.
First of all, I mean, to be completely clear, the Fed the entire year has said they're going to raise rates, and a lot of investors just refuse to believe them. And by the end of the year, a lot of people are just getting mad at the Fed for doing what they said they were going to do. Now, they have gotten things wrong. I mean, they said inflation was transitory, right? Which is clearly not the case, right? Who knew you couldn't print a few $1 trillion and that wouldn't happen? But look, I mean, I think they're doing what they said they're going to do this year. And Powell has been actually, think about every time we've debated between whether it was going to be like, 75 or 100 basis points or whatever. And it was just always more or less what he implied it would be, like it and what the market thought. It was really never that big of a surprise one way or another. So I think they are trying to be extremely clear. One of the reasons for that is because of what happened, with a taper tantrum in 2013. I do think they are trying to be clear. Is there, could there be some political motivation going into midterms? Maybe. I don't know. I mean, I still think they're gonna raise 75 basis points, regardless. I think that the other side of it is if the Democrats already, I mean, obviously high inflation is not good, right? So this is not going to help with re-elections and stuff, or re-election campaigns, that type of stuff. So if they want to have a good chance in 2024, then they need to get inflation back down before then. So you could argue that they're just sort of accepting it right now, and maybe by 2024 they hope that the pain is over and the market will look good again. Again, I can't really comment on exactly what their political motivations are. I mean, I think everyone is going to have some type of motivation, but I mean, for me to speculate on that would just be, it would just be pure speculation, and honestly, I have no idea.
Dubious speculation. All right. So next one. So James, what do you got? You think political motivation here, or is it just Jerome being Jerome, doing his job, and like, hey, I don't want to bring this down into a massive depression?
Well, I've been thinking a lot about this as well. Does he want to smash the economy so the Democrats get booted out of office on November 8th? Because he does have GOP DNA from the past.
Sure.
Interesting angle. Because I think he's a decent, fair man. I just think he reads the wrong data, which is a problem. Like all politicians follow the data. I think that doesn't mean that they follow the data, but follow the data of what the statement here is. So yeah, I think there is a small chance, but I think he's just following the data. He's trying to get inflation under control, but he's gone way too far. The economy is going to be smashed. 2023 is going to be a mess, but there will be bright spots. And I think I'm very, with all that's going on, the relative strength of Bitcoin is a really positive sign all around the world. I think the dollar will weaken as we go forward. Dixie will come down, Bitcoin will go up. I think money printing will continue into 2023. A lot of good stuff. It's not the end of the world. The only concern is tactical nukes. That's what I'm more worried about than elections.
Let's not talk about that, James. All right. So last two questions. First of all, this one's from James. What platform do you use to short crypto? If you're doing shorting of crypto, if you do it.
Yeah, I use a couple of different plays. I don't want to say the name of the platforms because I don't want to be seen as promoting them. But think of the two top derivative platforms that you use out there, and I use one using a VPN as a little trick.
Yeah, gotcha. That sounds good. And then this one's for me, the World Mobile Token balloon launch. Yeah, I'm waiting for that aerostat to launch, and then they can increase the amount of population that they give for telecommunications in Africa. I'm totally behind that project. Makes sense. And somebody says pay off your credit card every month. That's right, because you don't want to pay too much in interest. And then the last thing, well, two last things. The fact that only 1.7K viewers in the show, how many people have left the markets? A lot of people have left. Only the ones that are here that really understand the market themselves and can actually stomach it, those are the ones that are going to be rewarded later. It's just going to take a little bit of time, like we all talked about. I have no problems with that. The last one I will say, this is the question. There's this aura about Sam Bankman-Fried and the things that are going around about the negativity. And he was on Bankless today. I'm definitely going to take a look at that. Has there been any concrete evidence that either of you know about Sam Bankman-Fried and anything that's going on with the shenanigans behind the scenes and any kind of like illegal activity? I have looked far and wide. I haven't seen too much, or I haven't seen anything. I've looked at the bill that he's trying to pass. Yes, he talked about decentralization and the DeFi prospect. Yes, he did also say he was wrong on some different things and he's trying to get better input. I haven't seen anything as far as we should abandon these types of things. I could be wrong. Look, where there's smoke, there's fire. But have you guys heard anything? I'm just asking.
Well, I can make an observation that is people in this current environment despise successful people like SBF and Elon Musk, etc. There's a lot of animosity. Apparently, somebody broke into our best insider trader's house last night too. I don't know if that's true or not. What's her name? Nancy Pelosi's house.
She's a great. She's a great.
So there's a lot of pent up anger. I haven't found anything on Sam Bankman-Fried. Everything I know about him, he is kind of a philanthropic type of guy, lives a very simple life, drives a 15-year-old Camry, wears New Balance old sneakers, sleeps on the floor of an office, kind of like Elon Musk sleeping on the floor of a factory. I admire people that work real hard and, don't go crazy in that regard. So
I will just say this. Well, James or Ben, anything about that one or not really?
I mean, I don't really have much. I mean, a lot of this stuff is just pretty typical bear market stuff. You know, like, I mean, if prices aren't going up, we got to find something to talk about.
Yeah.
I don't really have any strong opinions one way or another. Haven't spent the time because I don't really care.
Yeah, they call that the chisme or the gossip. But I will say this: I don't know which way it is, but I've been wrong before. I think we all know that. I'm not perfect. That's why I made these rules to the left of me, where I talk about it's all gone. Don't invest more than you can afford to lose. Everything's a scam until proven otherwise. Don't trust any exchanges. Take it off the exchanges. If you don't trust Sam Bankman-Fried and FTX, guess what? There's a great thing called a ledger. You can take it off. You can store everything. Don't use leverage unless you're James, apparently. And then take profits along the way because no one went broke taking profits. And only use leverage, I should preface this, if you know exactly what you're doing. I'm not that guy to use 50 or 100x. Maybe some traders do 2x, 3x, not a big deal. But those are the rules that I've lived by so far. They've helped me out quite a bit. So if you don't trust anything, try to adapt some of those rules. And that's it. So look, guys, it's been an hour. We're gone over. I apologize. But everybody, thanks for stopping by. I do appreciate it. Again, you can find James over at Best Answers, Ben in the Cryptoverse. James got a great Patreon. He's gonna teach a lot of things that he talked about as far as trading. And Ben's got a great website, Into the Cryptoverse. I steal from it every single day. So thanks so much, everybody. We appreciate it. And we'll see you on the next one.
See you.
Adios.